Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is June 19 and we're starting from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0962 on Friday afternoon, coinciding with a significant rise of the MACD line from zero, limited the upward potential of the pair. Sometime later, another test occurred, but this time the MACD lines lies in the overbought area, providing hope for a downward correction. And with the pair nearing the monthly high, the quote declined by around 30 pips. Easing inflation in the euro area limited the rally in the euro last Friday. However, strong consumer sentiment data in the US revived demand for dollar, leading to a sharp decline in the pair at the end of the week. Considering the empty economic calendar and the Bundesbank report due out this morning, the market situation will remain the same today. For long positions, buy euro when the quote reaches 1.0947. and take profit at the price of 1.0980. Although growth may not continue as the reasons to buy euro ran out, traders could still do so, especially if the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0924, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.0947 and 1.0980. For short positions, sell euro when the quote reaches 1.0924 and take profit at the price of 1.0890. Pressure may return in the event of inactivity at the highs. However, when selling, traders should make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0947, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0924 and 1.0890. The next stage of our review is the next major, GBP USD. Sebastian Seliger presents. The GBP USD pair has hit 61% Fibonacci retracement level on the weekly timeframe chart, located at 1.2778. This is the line in sand for bears, as any breakout higher would be considered even more bullish. So far, the monthly high was made at the level of 1.2847, but it does not mean it will hold all week. On the lower time frames, like H4, the intraday technical support is seen at the level of 1.2809 and 1.2767. The strong and positive momentum on H4 timeframe chart supports the short-term bullish outlook for GBP. But due to the extremely overbought market, on the H4 timeframe chart, the market might pull back soon. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tapas. Gold is trading around 1954, below the 21 SMA and above 7-8 Muri level. In the daily chart, we can see that gold is trading within a downtrend channel formed since May 18. On June 15, gold reached its lowest level in 3 months, below 1930, but rebounded strongly, giving it an opportunity for a weekly close above 1937, which means an equilibrium level. This recovery of gold above 1924 means that, in the next few days, it could continue to rise and the metal could reach the psychological level of 2000 USD. The 21 SMA is located around 1957, which has become strong resistance level. Gold consolidates above 1970. We could expect the bullish cycle to resume and the price could reach the 2000 USD. And could even reach 2062 USD. However, the technical picture does not favor bullish momentum, because the Eagle indicator is approaching extremely oversold levels on the daily chart. Therefore, in the next few days, we expect a consolidation below 1968 as resistance and around 1925 as support. In case gold falls below 1937 and closes below this area on the daily chart, a strong bearish move could occur and the price could reach the low of June 11 around 1924. And even could reach the zone of 200 EMA, located at 1877. Conversely, in the event that gold consolidates above 1970, we could expect the bullish movement to resume and it could reach 38% Fibonacci around 1983 and even reach the Fibonacci 61 around 2023. What about crude oil commodity asset? Arif Makmur tells us how to trade it. If we look on the 4-hour chart, crude oil commodity asset seems being corrected to rally upwards, with the aim of 72.07 level as the main target and the 72.79 level as the second target, where this has been confirmed by the CCI indicator, which has managed to break its 3 levels: -100, 0, and 100, and the formation of the bullish 1, 2, 3 pattern and the bullish Ross hook. But it should be noted that the appearance of the ascending broadening wedge pattern indicates a potential weakening in the upward correction, which, however, as long as the weakening does not break below the 69.08 level, the bullish scenario described earlier is still valid. And finally, here's Laurie Bailey with AUD-USD pair focused. Let's have a look. Last Friday, the Australian dollar stayed above the target level of 0.6873. This morning, the price aggressively fell towards the target support level of 0.6810, accompanied by a downward turn in the Marlin oscillator. This situation indicates that the Friday consolidation was false. And now we expect the price to try and consolidate below 0.6810. If it succeeds, we expect the price to fall towards the target level of 0.6730, which coincides with a 38% correction level from the recent 1.5-month rise. On the 4-hour chart, the Marlin oscillator broke out of its consolidation range and moved up on Thursday, but returned back into it on Friday evening. This also appears to be a false movement of the oscillator, and now we expect it to leave the range and fall into a bearish trend. The MACD indicator line is approaching the level of 0.6810. Consolidation below this level on the 4-hour chart would correspond to consolidation below the indicator line, signaling a further decline. However, breaking the Friday high of 0.6902 could disrupt this plan. In that case, the target would shift to 0.6940 daily chart. That's all for today. See you online soon. Good luck.